Right, so we were discussing about capital adequacy. You have learned a formula A equals C plus L when you are doing accountancy. A equals C plus L. What do you mean by that? What do you mean by that? I think some of you have done A-level mathematics and accountancy. In accountancy, that's it. Assets equal capital plus liabilities. Right. So this is the very basic formula in accountancy. For the bank, assets mean the loans we give. Means what? If you have a capital of 10 rupees, we may get 90 rupee deposits from customers. Altogether, now we have on your right hand side 100, 90 plus 10. That we give away, that amount of money we give away as loans. So the loans recoverable becomes our asset. Asset is 100, capital is 10, liabilities is 90, that is the deposits. If a customer fails to pay back, our asset quality deteriorate. Now, if the asset side decline to 90, means what? 90 is equal to liabilities. Deposits we are not going to change. 90. Capital has to absorb the loss. Entire loss 10 will be absorbed by the capital, or the owner will absorb loss. Now asset is equal to liabilities. Means what? We have capital to cushion the losses, possible losses. We must have enough capital to absorb losses. If the losses become 30, then assets is 70. Now that passes to the depositors. That's where depositors find it difficult to get their deposited money from the bank. In order to avoid such a situation, capital adequacy is looked at. Capital adequacy is a cushion that will absorb losses without transferring the losses to the depositor's side. Banks are different from many other companies. In many other companies, capital is a considerable amount on your right hand side of the formula. Owners have to put a good amount of money, then the banks will give you some loans, looking at how much capital you have given. But for a bank, even with 10 initial capital, you can ask general public's deposits. It's only the central bank approved institutes that can accept deposits from general public. For all the other institutions, you don't have that privilege. You cannot accept deposits from general public. Therefore, capital definitely become a considerable percentage of your right hand side of the formula. Means what? Banks and finance companies are places where you can do businesses out of other people's money called deposits. And the deposit holder is not involving in day-to-day activities. He's not looking at to whom you are giving loans. He's only looking at the ability to withdraw his money and ability to earn some interest. Right. We'll first go through the slides. Capital adequacy. The capital adequacy ratio, CAR, is a measurement of a bank's available capital expressed as a percentage of banks' risk-weighted credit exposures. In your formula, left-hand side, assets, means what? The loans recoverable is considered as risky assets. Why do you think the loans given are risky? Why do you think the loans given to someone else is a risky asset? What is the risk of giving loans? Very good. The borrowers might not pay. They may fall into default. That is the risk we are undertaking. Now, three people come to a bank to get loans. The first person wants to get a loan against his own fixed deposit. Customer A has deposited 10 million in the bank. Against that 10 million, his own fixed deposit, he wants 2 million as a loan. Customer B, he wants to get a leasing facility of 2 million for a school van. Customer C, he wants 2 million to start up a website. Okay. So each customer you have given a loan of 2 million. Customer A against his fixed deposit. Customer B, leasing facility, 2 million, school van. Customer C, 2 million to develop a software. Now, which one is risky out of these three loans? Customer C's loan is risky. Why? Why? Customer C's loan is risky. Agreed. Explain me why. Yes, the development or the success of software development cannot be measured easily. Number two, the software or a website is just space. There is nothing tangible to capture and resell. If you think about school van, you get absolute ownership. We have discussed that under finance lease, and you become the absolute owner. If he does not pay, you can get hold of this vehicle and sell it. You have an asset. In fixed deposit, that is the asset. Okay. Now, what is the least risky loan given? What is the least risky loan given? A. Why? Because he has obtained a loan against fixed deposit. He has given more money to the bank. Out of that more money, a little bit taken out. So A is the least riskiest. Means what? The loans given can be categorized based on risk weight. Loan given to customer A is less risky. Loan given to customer C is high in risk. So you can weight the risk involved of the loans given. That's we are considering risk-weighted credit exposure. The capital adequacy ratio, also known as capital to risk-weighted assets. Now you know that we talk about loans as the asset, and that loans have different risk weightages. Therefore, we can risk weight the assets. Ratio is used to protect depositors and promote the stability and efficiency of the financial systems around the world. Means what? Now, capital adequacy ratio ensure a bank cannot give loans more than the stipulated amount, more than the designed amount for them. With that, the banking system ensure they are stable. Around the world, means what? These agreements are valid throughout the world. Basel Committee on Banking Supervision is a committee of bank supervisory authorities that was established. Okay, we are talking about this global impact. We said worldwide, around the world. Means what? If you are going to ensure banks are stable throughout the world, then there must be an organization to look into these rates, decide these rates. That is the Basel Committee. Basel Committee. Basel is a city. The bankers who get together into this city decides on the capital adequacy ratios. That was established by the central bank governors of the group of 10 countries in 1974. That's where the Basel Committee started, with 10 governors of central banks. The committee expanded its membership in 2009 and then again in 2014. In 2019, Basel Committee on Bank Supervision, BCBS, has 45 members from 28 jurisdictions, consisting of central banks and authorities with responsibility to the banking regulation. Basel Committee is looking into the stability of the banking system throughout the world. They stipulate certain ratios. At least you must maintain this much of capital against the risk-weighted assets. That's what they are saying. It provides a forum for regular cooperation on banking supervisory matters. Its objective is to enhance understanding of key supervisory issues and improve the quality of banking supervision worldwide. The committee frames guidelines and standards in different areas. Some of the better known among them are the International Standard on Capital Adequacy. That's what we are discussing today. You must keep enough capital against the risk-weighted assets or the loans you have given. The core principles for effective banking supervision and concordant on cross-border banking supervision. So Basel Committee is looking as the cross-border bank supervisor. Now that's where the Basel Committee head office means. This is the building. The committee's secretariat is located at the Bank for International Settlement, BIS, in Basel, Switzerland. So Basel is a city located in Switzerland. The governors of central banks of leading economies get together and decide on the banking stability. The Bank for International Settlements, BIS, hosts and support a number of international institutions engaged in standard setting and financial stability, one of which is BCBS. Okay. Financial stability. Financial stability means what? If one bank fails in one country, maybe in a leading economic country, say a bank of US, a bank of England, a bank of France, collapse, that will have repercussions on the entire banking system of the world. People will find, okay, this bank has collapsed. If so, the bank where I put money will also be threatened, will be in danger zone. If so, the best thing what I can do is I'll withdraw my money. Okay. Now, I'm asking a simple question. Anyway, English is not our mother's tongue. And in English, there are, when certain two words get together, they create entirely a different meaning. We were talking about bank collapsing, one bank's collapse influencing into another bank's stability. Okay, but I'm asking you a very simple question. I'm giving you a very simple term. Tell me what is the meaning of it. Chicken run. What do you mean by chicken run? Yeah. Anyone? Tell me the meaning of this simple word. Okay, tell me the meaning of this word, and I'll give you another term, bank run. Okay. What do you mean by chicken run? And what do you mean by bank run? Okay, right. Now, English is a language which is not much familiar to us. When I watched the movie Chicken Run, maybe I was in my 30s, and I had this understanding of what you noted down. All chickens follow one chicken. That's what I thought. Even after watching this movie, that was my thinking. But later on, when I happened to teach English to my children, I was reading some storybooks with them, and the term chicken run was used in this children's book. And I came to know, even after checking with Google Images and dictionary, here the word run means cage, chicken run. It's kind of a cage that will keep the chicken. Or the, right. So that's here the word run means cage, a place where these birds can be located. Now, bank run. What is the meaning of bank run? The first meaning is cage, C-A-G-E, cage. Bank run. What is the meaning of bank run? Yeah, correct. Depositors fear of a collapse and rush to take out their deposits. That is called bank run. Right. So bank run will take place when one bank collapses. When one bank collapses, depositors of other banks believe the bank where they have deposited money is at a risk. Therefore, they want to rush. And today, just using internet, they want to withdraw money, or just go to ATM machine, they want to withdraw money. And if every depositor want to withdraw money, no bank can provide. No bank can facilitate that, and the bank will collapse. That news will run, and another bank will collapse. Very soon, the entire banking system will collapse. That is the situation taking place if not financial system stability is ensured. The Basel is looking into financial system stability. Now, when we are talking about capital adequacy ratio, we are measuring risk-weighted assets against the capital given. Capital can be considered in two categories. One is called core capital. Core. Core capital. We call it tier 1. Capital can be categorized into two. One is called core capital. The other is supplementary capital. A similar word for core capital is tier 1 capital. Core means the center, and supplementary means the peripheral, things around the core. Core will remain as long as the business will remain. We can just think like that. Think about the ordinary share capital. That amount will not move out, will not vanish until the company dissolved, until the company liquidated. That is the core. Supplementary capital, surrounding things, or we call it tier 2 capital. Supplementary capital or tier 2 capital is the second category. Therefore, there are two categories. One is tier 1 or core capital, which can absorb losses without a bank being required to cease trading, without the bank closing down. You can not. absorb losses. Tier 2 capital, which can absorb losses in the event of a winding up, and so provides a lesser degree of protection to the depositors. So tier 2 capital provide lesser degree of protection to the depositors. Calculating capital adequacy ratio. Now, how do you calculate the capital adequacy ratio? Okay, today I'm just touching upon this. Next week, I'll give you enough reading materials and we do some calculations on capital adequacy ratio, how to do a real calculation. The capital adequacy ratio is calculated by dividing a bank's capital by its risk-weighted assets. The capital used to calculate the capital adequacy ratio is divided into two tiers, tier 1, tier 2. Capital adequacy ratio is core capital plus supplementary capital divided by risk-weighted assets. Then you must know what are the elements of tier 1 capital, what are the elements of tier 2 capital, and what are the categories of risk-weighted assets. We'll discuss further about capital adequacy ratio after the reading materials, which I will hand over you next week. But for the time being, remember, assets given to customers or the loan recoverables from customers are risky assets. The risk can be of different weightages. Some assets given, some loans given, some assets of a bank, they don't have any risk at all, zero risk. Certain assets are 100% or more risky. Then other assets can be 50%, 10%, 20%. So we have to categorize the risk weight. Then the capital can be considered into two parts. Core capital. Later on, we'll discuss in detail what are the elements of this core capital, like paid up authorized ordinary shares, non-cumulative, non-redeemable preference shares, general reserves, unpublished profit and loss account, published profit and loss. So likewise, what are the elements of tier 1 capital? Then comes tier 2 capital. What are they? We'll discuss in detail after reading some good reading materials next week. And as I said last week, now we have to focus on real exam questions and how to answer that. I did one simple test last week and I'm happy with the way I get the answer. Today I want more participation. Right. Last week I told you the structure of your exam paper. Question number 1 is compulsory and there are 5 short answers, 5 MCQs. After that, you have the second part where you have to select questions. And these questions are made out of one main subject topic. Today we will select one simple subject topic. Hope you all can remember unit trusts. So I'm giving you questions, real exam questions on unit trusts. Take your time, answer, and send me your answer in the chat box. So we'll check how you are preparing for the exam. So today I'm just taking one topic, unit trusts, and I'm giving you questions and I'm looking at how we are going to answer that. I know it's very simple and very interesting when I tell you stories, when I talk entire 2 hours. What you have to do is just listen and look at the slides shown from time to time. When it comes to your end, now I am giving you questions and I'm waiting. You have to answer. You have to send me the answer. That may not be much interesting, but still you have to do it because the purpose of your engagement is to pass the exam. Okay. Question number 1. Describe 5 benefits of investing in unit trusts. Question number 1. Describe 5 benefits of investing in unit trust. Now, take about 5 minutes and send me your answer. Describe 5 benefits of investing in unit trusts. Okay. Now you have given 5 points. Correct, cost effective, quick return, managed by professional fund managers, tax free, flexible to invest. Very good. Now you are answering in section B, or the second part. In first question, number 1, compulsory, you have short answers. Here, try to write at least 2 sentences for each, describing or explaining each factor. Got it? Cost effective. Hyphen, what is that? What do you mean by quick return? Managed by professional fund managers, put a hyphen and tell me what are the benefits you get out of that professional management. Okay, I'll read out the answer. Next time I want you to write to that extent. So the purpose of what I'm doing today is to show you the expected level of answer. Okay. Question number 1, the type of answer you gave is sufficient enough, because you are asked to write for short answers. We expect short answers from you, like what you noted, 1, 2, 3, 4, 5. But in other questions where each will give you 5 marks, we want to see a little bit of explanation of what you note. I'll read out. Now, these are the benefits of investing in unit trust. It's rewarding. A unit trust can offer a much faster rate of return than a bank deposit over a period of 3 to 5 years. So that's explained. Your quick return is explained. Now you talked about cost effective. That is explained. It's cost effective. You need to have millions to invest in land or lakhs to open fixed deposits. But you can invest in unit trust with as little as 1,000 rupees. Okay. So your fact, cost effective. Describe it. Write 3-4 sentences describing what is meant by cost effective. Then, with a small amount of 1,000 rupees, you have the privilege of earning a return from a well-diversified portfolio of investment. Now, that is not mentioned in your answer. Diversification. When we were discussing about unit trusts, we described diversification as a benefit. Now, what is meant by diversification? For a small amount, for a very small investment like 1,000 rupees, still you get the benefit of a well diversified portfolio. So you can describe that. You need not to commit long hours to make your investment decisions, which include analyzing information, being constantly vigilant of equity and fixed income markets, learning and adapting different investment strategies. It is taken care of by the professional fund manager. Now, your fact number 3, managed by professional fund managers. That is explained. Okay, so it is explained. The fund will be managed by professional fund managers. Therefore, you need not to allocate extra time to study the market trends, interest rates, and to develop strategies. Professional managers will handle these difficult tasks on behalf of the customer without charging any additional fee. Now that is the benefit. So number 3 must be described. Then the assets of the fund are under the custody of an independent trustee who looks after your interest. So that fact can also be included. It's flexible. Yes, number 5. It's flexible. With unit trusts, you can invest additional money whenever you have some, and you can pull out your money whenever you need it without any penalties. Try doing that with property or return deposits. You cannot do that with property investment or fixed deposits. Flexibility. Okay, right. So you got the point. You have to describe these facts. Okay, I'll give you another question. Outline the parties involved in unit trusts and their functions. Outline the parties involved in unit trusts and their functions. I see answers from only one person. Yeah, others can also send me your answers. Now you know the expected standard. Describe with 5-6 sentences. Okay, so the question number 2 is outline the parties involved in unit trusts and their functions. We talked about 3 parties. Okay, tell me them and describe their functions. There are 3 parties. First, tell me the 3 parties, then describe them. Very good. Very good. Unit holder, buyer of units by investing. Very good. The fund manager, makers of best investment decisions and prepare annual reports and declare dividends. Very good. Trustee, act as the watchdog to protect investors. Perfect. That's enough. Another good answer. Number one, the fund manager acts in the best interest of the unit holder by making the best investment decisions. Perfect. Number two, trustee act as a custodian to the unit trust and ensure the money is maintained as per the trust deed. Correct. Unit holder by units. Correct. Good. Two good answers. So I prefer to see others answering as well. Very good. Question number three. Okay. Now this is the standard I need. You know the answer, and now you have to explain that as well. So the answer level, I got two answers. I'm happy with both answers. Number three, describe at least three types of unit trusts. Describe at least three types of unit trusts. Okay, so I'll modify the answer, modify the question. Number one, list the types of unit trust. List the types of unit trusts and describe three. Okay. Now here you need to list all what you know, 1, 2, 3, 4, whatever. Then describe just three. Okay. Take your time and answer. Okay. Now first you can list gilt-edged, income fund, balanced fund, money market fund. Okay. First you list, then describe three. All right. Let's see some other answer. I'm okay. Right. Good. Good. So the five is listed and three is described. Very good. How about others? Like to see some other answer as well. I'll give a few more minutes. So if any other has written the answer, send me. Okay, good. Another format. First you list 1, 2, 3, 4, 5, then describe. Very good. Gilt edge funds, income fund, balanced funds, indexed funds, money market funds. Yes, okay. Agreed. Right. Now, all these three questions from one paper. So I'm asking these questions from September 2016 exam. Question number 3 is on unit trusts. All these three questions we have discussed in the class, and you have a ready-made answer and you have done it perfectly well. But remember, today I want to show you how the exam questions are set. Question 1, 2, 3, you can directly write the answer. You can say, yes, we did it in the class. But the fourth question we have not discussed in the class. Right? That's what happened. When you go to the exam, yes, certain questions you have a very perfect answer. We have discussed in the class. I have given you the slides and you have gone through the slides by hearted, whatever, you can write the answer. But there may be one question of each category where you may have to think. That question was never ever discussed in the class. Okay, write down. Describe how unit trusts can promote capital markets in Sri Lanka. Describe how unit trusts can promote capital market in Sri Lanka. Think and write the answer and send it. I get answers from 2 students. I prefer to see answers of other students as well. This one, no ready-made answer. I have not given, or I have not even discussed this matter in the classroom. But in the exam, you may get such questions. In each heading, say under unit trusts, most of the questions say 3 out of the 4 discussed in the class, but one you have to think and write. Okay, do it now. Okay, we have not discussed, yes, but now you know what is unit trust, you know what is capital market. Under venture capital, we have discussed why venture capital is not popular. Okay, I have given you some reasons, right? Even though I have not given the direct answer to this question, I have given you enough material to think. Good. Since the unit trust provides the benefit as diversified investment with the aid of professionally abled managers, and the investment can be made with even a very small amount, it gives the opportunity for the general public to make investment in the stock market, which will enable them to gain tax-free returns. Very good. Agreed. If I read out the model answer, okay, so your answer is really good. I'll read out the model answer. The unit trust industry, which is a vital segment of the capital market of Sri Lanka, is the best conduit to mobilize savings of the less sophisticated small investors. Small-scale investors start their investment through unit trust, as it is less risky than investing in the market directly. Okay, so you can say the less sophisticated depositors who do not know much about stock market can invest in stocks indirectly because they do not have the know-how to directly invest in stock market. The unit trust can provide a way to invest in the stock market which is lower cost and lower risk than the direct investment in the stock market. If a depositor directly invest in stock market, he may undertake very high risk as he lacks professional knowledge in fund managing. Unit trusts pool funds from a large number of investors and then spread this across a range of stock market investments. I have talked about pool, P-O-O-L, pooling funds, pooling money from large number of retailers. And that aggregated amount will be invested in the capital market. Unit trust is designed for less sophisticated investors to participate in the growth of the different sectors and to diversify their investment. Less sophisticated depositor can get the best out of investment with a diversified portfolio. So I accept your level of answering. That's perfectly okay. So what I read out is the model answer. Right. Now, this is how we must prepare for the exams. Number one, you must go through the slides which I have given. You must listen and understand what we were discussing in the classroom. Then sometimes you have to think and write. Thinking. In order to think, I have given you enough raw materials. So take these raw materials, cut them, polish them, and put them and present as the answer for your exam. So this is how a good exam question is set. Looking at the syllabus, the examiner knows these are the areas you have learned. In addition to that, one question is put to check your general understanding. Now, let's talk a little bit, then we can see another question from unit trusts. Okay, I did my O-levels in 1988. In 1988, we had a new syllabus. Remember, syllabuses are changed by the relevant authorities in order to match the requirement of the economy. So we came with new syllabus. Now think about the old syllabus that was in 1980s. In old syllabus, students had some nice optional subjects. So in my school, that was a boys' school, there was a weaving room. So those who want to learn the weaving, cloth making, can get into that. Motor mechanic, there was a motor mechanic room. There was a master who is having a very old engine. He will display, and anyone who is interested in motor mechanic can get into that. there was a classroom for radio. So there was a master for repairing and doing this radio. So the students who went to that optional subject learned LED, the bulb setting, siren horns, and lot of circuits they did. Then there were few boys who have selected pottery. There was a lady teacher teaching how to make clay pots, clay things, how to put into oven or something and get the clay materials. In certain schools, there were carpentry. Okay. Means what? The students were trained to a vocation. But with our new syllabus, instead of having these optional subjects, we were given one common subject for every student, Jeevana Kusalata. And we were taught how to make sandwiches. Then there were different toys, how to make some soft toys, how to make fruit juice. Now that was added to the syllabus instead of this vocational training. For the economy, what would be most suitable? Later on, the leasing field became popularized and the youth started to drive three-wheelers and earn a daily income and be happy with that instead of going for a vocational training like at German Tech, AC, motor mechanic, nothing. But if you have continued this old syllabus, instead of maybe weaving, when we find, okay, weaving is getting out of date, we could have introduced mobile phone app development as a subject. If that was done, you can think the way economy is moving ahead. Okay. Right. So the last question was something like that. How do you get the benefit by investing in capital markets? Right. We'll take another exam question. When you are preparing for exams, when you look at the past papers, you will understand certain questions were repeated again and again. And certain questions were included to check your ability to apply what you have already learned under the subject. Okay, so another question. This time I'm taking March 2016. Last time that was September 2016. Now it's March 2016. Means what? Unit trust as a main topic is an area that will be questioned at paper. So you have to have a good understanding on unit trusts. Okay. Right. So in this paper, question number 3, 2016 September, also question number 3. First, you have a sentence. Unit trusts, which were introduced to Sri Lanka in the early 90s, have grown in popularity as an alternative investment tool. So that's how 1 or 2 sentences will describe the questions to come. Question number 1. What is a unit trust? Very simple question, 5 marks. Okay. Now you can write the answer. I have seen answers so far only from 2 students. I prefer to see answers from others as well. This is a very simple question. Okay, try. I'm not naming and blaming and shaming anyone. Okay, try to write the answer in a very short time. Okay, what is a unit trust? Send me your answers. Okay, others, at least you can, that's a very simple question. I'll accept these few lines. Now others, you can even go through these answers already sent and send me your version. Right? You can see two different answers earlier. Both were correct. Okay? Read them and develop your own answer for this simple question and send me. What is a unit trust? Very good. So the keyword is included in both these answers. Pool. Very good. I get the third one. Very good. Others. This is a very simple question. Read the three answers given and format your answer and send me. I know some of you are not that good at typing. Whatever it is, send me the answer. I got three answers so far. Very good. Others, try to send me your answers. Okay. Right. So right. So three of you have given me the answer. I'll accept both three answers as good answers. And now I'll read the model answer. An unincorporated mutual fund structure that allows funds to hold assets and pass profits through to the individual owners rather than investing them back in the fund. The investment fund is set up under trust deed. The investors is effectively and beneficiary under the trust. Okay. So these three answers sent me are perfectly okay. You have included the word pooling and you have described them. Very good. Now, second question, I'm not going to type and you need not to send me the answer because it's a repeated question from the earlier paper as well. Now see the beauty of it. What is tested in 2016 March? The same question, maybe with slight difference, tested again in September. Means what? If you do past papers after thoroughly preparing, you will definitely get some kind of repeated questions. Okay. So I'm not typing. You need not to send me the answer. The question is, describe three main benefits of unit trusts. Describe three main benefits of unit trusts. Now you know the answer. Answer is already mentioned. Okay. Now the third question. Where are the funds raised by unit trusts invested? Where are the funds raised by unit trusts invested? You know the answer. Now this is indirectly asking the five types of funds, five types of unit trusts. So if you know the five types of unit trusts, then you can easily answer this question. This is not a direct one, but indirectly asking the same thing. Right. So send me your answer. Others, take your time and send me the answer. Where are the funds invested? Where are the money of unit trusts invested? Simple as that. Others, send me your answer. Now the question is asking, the money collected by the unit trusts are utilized for what? Where do they invest? Okay, tell me, where do the unit trusts invest? Even though it is not a unit trust, we talked about Norwegian Petroleum Fund. They have a fund, and where are they investing? Tell me the investing options. Send me the investing options for the unit trust. You can even think about unit trusts or a Norwegian Petroleum Fund. Others, where are the money collected utilized? Okay. Now you can say, number 1, treasury bills. Number 2, treasury bonds. Number 3, corporate bonds. Correct. Number 4, equity or shares. Right, correct. Okay. I'll read out the model answer. Number 1, listed equities. So you said shares, stocks, listed equities. Number 2, gilt-edged securities. Instead of the word fund, here, where? What are the investments? So gilt-edged securities, hyphen, treasury bills, treasury bonds. Money market, fixed income securities, hyphen, corporate bonds, debentures. Then 2 other things added, real estates, commodities. Real estates and commodities. Okay. Now, if you go through Norwegian Petroleum Fund, we have discussed about that fund earlier as well. You can see they invest in real estate as well. Okay, I have talked about Qatar, the investment fund. Okay, Qatar is a small country, but oil-rich country. They have excess cash made out of petroleum. When Norway invests mostly on stocks, Qatar invests in real estates. It is said that 70% of the commercial property square feet of London belong to Qatar Petroleum Fund. They invest in real estates. Then some invest in commodities. Gold is a commodity. Now you know what is happening with the gold price. We talked about investing in gold. And we said why gold is so popular for investment. Some people invest in commodities. Right? So unit trusts, I agree with all what you already said, but in the model answer, these 2 are also added, real estates and commodities. If you think about Norwegian Petroleum Fund, look into it, a considerable portion is invested in real estates. Qatar, their petroleum fund, highest investment in real estates. Then some investors in commodities. Okay, commodities consist of gold, silver, petrol, wheat, cocoa, aluminium, everything. Okay. There were different type of investors. One investor was nicknamed Chocolate Fingers because he collected a lot of cocoa commodities. So he was almost like a monopoly supply of cocoa for chocolate manufacturers. Then one guy was purchasing aluminium, and he was almost like a monopoly deciding the aluminium price. So some investors do collect commodities. Okay, another question from unit trusts. The last one, number 4. Name the regulatory authority for unit trusts and describe briefly its regulatory role. Name the regulator. Name the regulator and its role for unit trusts. Name the regulator and its role for unit trusts. Okay. Name and what do they do? Yes. SCC is the regulator. Right, good. Then the role. Others try to write something is who is the regulator and what are the activities as the regulator. I'll give some more minutes. Okay, right. So I'll read out the answer. Regulatory authority is EC, Securities Exchange Commission of Sri Lanka. So your answer is correct. Then the activities. Number 1, grant of a license to operate a unit trust. So you have said registration of market intermediaries. Right? So I have told you, whenever you get a question about the regulator, the standard answer would say issuing of license, suspending of the license, and cancellation of the license. So all the tigers have teeth. If you don't have teeth, you are no more a valid tiger. Okay. So the authority that has the ability to pass license, control the entity by suspending and cancelling the license. So I who give the license can cancel the license. That's my power. Okay. The only situation that happened was after 19th Amendment President can appoint the prime minister, but the president cannot remove the prime minister. The regulator can give the license, but cannot cancel the license. But in real, the authority who give the license can suspend the license until certain explanations were given, or even cancel the license for non-compliance. So that's number one. So your answer is also there are registration of market intermediaries, that is licensing. Number two, issue terms and conditions to the unit trusts. Yes, issue terms and conditions, that's there. Then monitor the unit trust operations and checks all professions and organizations involved. You have said carry out surveillance. Perfect. Okay. Then grants approval for the trustee of a unit trust, not only to the unit trust, even to the trustee, the approval will be given by SEC. Right. So we are discussing about unit trusts today, and earlier we have covered that. Today we are looking at questions from past papers. Now you can see the importance of doing past papers. Certain questions were repeated. Now I'm taking another question, this time March 2015, question number 3. Now we are looking at past papers. Even in the third paper, the third question is unit trusts. So you have few sentences given at the beginning. Unit trusts were introduced to Sri Lanka in 1991 to provide an alternate investment for the people of Sri Lanka to benefit from the capital market. There are many unit trusts available in Sri Lanka, and investment in a unit trust is a popular mode of investment today among many passive individual investors. Okay, so I'm not asking first the exam question, but I'm asking what is meant by passive investors. This is not exam question. Out of the sentences given here, I'm asking you what is meant by passive investment. What is passive investment? In grammar, what is the opposite word of passive? Active investors. Yes. So passive investment versus active investment. Okay. Active. In grammar, what is active? The activity is done by the owner of the sentence. Okay. The activity is done by the owner of the sentence. That is active. Passive means what? Who does it is not mentioned. Passive. Not directly involving. Okay. We always prefer to engage in activities, and we always think to be very active. But investment sometimes is a very passive activity. Passive means no investment, no activity by the owner. Right? Now suppose I purchase Richard Peel's Exports share at 60 rupees. It moves up to 90 rupees. What should I do? I purchased a share known as Richard Peel's Exports at 60 rupees. After 6 months, it went to 90 rupees. What should I do now? Sell it. Very good. So I buy, I sell. I'm active. Okay. Now I sleep. I don't sell. I forget it. That is passive. What will happen to me now? Right? The best thing is I should have sold at 90. But I'm very passive. I don't actively look at the market. I miss the opportunity. Now what is happening to me? The passive investor. What is happening to me? Today, the share has gone up to 260 rupees. If I was very active, I should have sold at 90. I'm very passive. I don't even look at the market. Now the share has gone up to 260 rupees. And I get a dividend 25 rupees for 60. For investing 60 rupees, I get 25 rupees as a dividend. It's almost like 50% fixed deposit rate. Very good. And the share has gone up by 4 times. The more I hold, the more dividends I get. I'm very passive. So that is called passive investment. Okay. We always love to be very active, to do many activities. Okay. I buy at 60. Tomorrow it has gone to 70. I sell it immediately. And I think I'm very active. But there are many passive investors who invest and forget and get the real benefit. Okay. Right. I'll repeat what I mentioned. Question number 3, unit trusts were introduced to Sri Lanka in 1991 to provide an alternate investment for the people of Sri Lanka to benefit from the capital market. There are many unit trusts available in Sri Lanka, and investment in unit trust is a popular mode of investment among many passive individual investors. So passive individual investors, they are not involving in day-to-day watching, monitoring. Question number 1. Describe what is a unit trust and how does it operate? Okay. Somewhat similar, but a different question. How does it operate? What is a unit trust? You have already said what is a unit trust. But here, an additional part is there. How does it operate? Okay, send me your answer now. What is a unit trust and how does it operate? Yes, very good. The aggregate sum of investment is pooled, which may comprise of stocks or bonds. Then the same is invested in diversified segments as per the investment objective of the fund. Very good. The income earned is shared in proportion of units held among the unit holders. Very good. We'll look at the answer A professional managed investment fund which pools money. So the term pool is used. Many investors with similar investment objectives by issuing units. The aggregate sum is then used by funds to build diversified investment portfolio which may comprise stocks, bonds and other assets in accordance with the investment objective of the fund. Okay, good. Next one. Describe 3 benefits of investing in a unit trust. You need not to write to answer. You have already done that. So the same question is repeated for the 3rd time. What are the benefits of investing in unit trusts? Next one. What are the main sources of return to investors in a unit trust? What are the main sources of return for an investor in a unit trust? 1, 2. What are they? What are the main sources of return for an investor in a unit trust? Very good. Dividend income, capital appreciation. Right. Now I'll give you another question where I want you to find the answer and tell me next week. Okay. So still under unit trust. Now remember the format of the exam. In second part, questions are raised from different subheadings. Today we selected the subheading unit trusts, and in the papers we have seen so far, question number 3 is allocated only for unit trusts, and the format of these questions are such: 3 questions we can write without any problem, because that area is discussed in the classroom. 1 or 2 questions may be repeated again and again, but one is added, and that added one was never ever discussed in the class. Okay? So you have to prepare yourself as well. Right. So I'll give you this question. I don't want the answer now. Study means what? You can search by using Google, or you can ask from friends, look at some known parties, and try to answer this question. Next week, tell me your answer. So this is the 4th question under unit trust of the same paper. What is the special permission given to foreigners to invest in unit trust? Okay. We being a developing country, one challenge we face is foreign investments. In 2011, after ending war, we saw a large inflow of foreign investments to stock market. But now we see a large exodus getting out of foreign funds from stock market. Market may be going up thanks to some high net worth investors, funds, local funds, and for retail activities. But foreigners have been selling continuously. Oh, about 2 years, they are getting out of the market. Right? So we want to see many foreign investments. Unit trusts, in order to attract foreign investments, the foreigners were given special permission that was known as SIA account. Normally, if a foreigner invests, he has to invest through a SIA account, SIA. That was special investment account. So if a foreigner invests in stocks, he has to invest through SIA account. So you disclose yourself. But the permission was given for foreigner not to open a SIA account, and he can invest or sell his units and get out of the market without any problem. So that was the permission given. I want you to study on that area. The SIA account is now known by another name. What is that? And come up with a proper answer for this question next week. What I want you to do now is prepare yourself by looking outside as well. In the classroom, remember this nice format of the examiner. Out of 4 questions, 3 is within your syllabus and already discussed by your lecturer, by your tutor. But the examiner prefers to add a question from nowhere. But if you read and get updated, that question is not a big issue. Okay? Then yes. Now, unit trust is not a difficult subject. I have given you the relevant notes and I have discussed in detail in the class. So even when I'm looking at the answers, I'm happy at least 2 or 3 students are writing very good answers. I really love to see the answers of others. Now, this is the problem of online classes. Maybe some are not good at typing, okay? And maybe for different reasons, I don't see other answers. But if it's a physical classroom, I'll give the question and I'll move around the class. Then I know who is writing and whom I have to force to write. Okay, now last week we talked about superannuation. I hope you can remember. There was only one question so far on superannuation, and I'll give that question so you can write the answers as well. So that question appeared in September 2014. I want you to go through the entire syllabus and prepare you to write any type of possible questions in this subject area. Right? Unit trust, a repeated question area. Now this one, not a repeated question area. Right? So I'm preparing you even to write for these less tested areas. Now there is a sentence, provident and pension funds play a major economic and social role in the country, especially during high risk of aging population. Okay, so we are the country with aging population. Right, so we are going to see more old people than young people. You know what happened to Japan? Japan became so developed and they forgot to have children. Okay, they were so much active in economy, and for known and unknown reasons, they forgot to have children. Today, Japan is a country with too much older, elderly people. Sri Lanka is joining that journey. But Sri Lanka is not as bad as Japan. Okay, so we see small babies and children. Okay, so that's not a rare incident. Right. So that's what the first sentence. Provident and pension funds play a major economic and social role in the country, especially during a high risk of aging population. Anyway, question number 1. Describe how above funds serve the economy and the society of a country. So the funds are pension and provident funds. Question is, describe how above funds serve the economy and the society of a country. Okay. I want to prepare for this kind of questions as well. Reality tested. Describe how provident and pension funds serve the economy and the society of a country. Think, write, send me the answers. Describe how ETF, provident funds serve the economy and the society of a country. Very good. So Nadini, you have answered to one part. That is how this fund will be useful to the economy. Okay, that part is perfectly answered by you. Now to the society. Think on that and write the rest. So you can write another paragraph. What benefits the society get out of these funds? Okay, society in the sense individual. Let's say the older people. Very good. Very good. The funds can be invested in projects that will enable to revive the economy. Since the funds are usually invested by the general public for the long-term purpose, very good. You need long-term investments, right? Hence, the same will not be taken out in a shorter tenure like bank deposits, very good. There are projects like maybe highway developments. You will invest today, but you have to wait 20, 30 odd years to harvest. It's not like bank deposits where you want to withdraw in short notice. Society, yes. So the younger generation will not have the burden of looking after the elderly. Very good. Economy, the mobilization of long-term savings to funds invested in securities markets and real sector projects. That's covered. Society, retirement benefits to reduce the age dependency ratio and connected social burden of the retired persons. Perfect. Second one, What are the major differences between EPF and ETF? What are the major differences between EPF and ETF? Last week we discussed with the slides, so you can answer. Enough. The major differences between EPF and ETF. The contribution, what percentages, who manage that, who administer that. So these are the differences. Yes. What are the percentages? Last week we said 8%, 12%, 3%. Tell me the percentages. Then who is monitoring it, administering it, managing it? So these are the differences. Monetary Board, Commission of Labor. Okay. So last week we discussed that. You can add that to the answer. So next question I'm asking you, why should these funds adopt a strategy of greater diversification of investment from short term to long term, from less risky to more risky? Why should these funds adopt? Correct. Adopt. Okay. Earlier question, your answers are accepted. This one, why should these funds, EPF and ETF, provident funds, okay, adopt strategies including long term to short term? They must cover long term and short term, less risky to high risky. Why? They must diversify to include long term, short term, less risky and high risky. Why? Yes, to maintain liquidity, long-term and short-term mixture need to manage the maturity mismatches. Very good. Then less risky, high risky. If you go for less risky, you can put everything into government securities, but the return is very less. Therefore, you add equity where the risk is high and the return is high. Right. Okay. Next one, what is the specific importance of financial institutions offering pension funds to public in Sri Lanka? What is the specific importance of financial institutions What is the specific importance of financial institutions offering pension products to public in Sri Lanka? Yes. Pension schemes are not available for private sector employees. Therefore, finance companies offering pension products is very beneficial to the society. And in Sri Lanka, it is considered as an aging population. Okay, very good. Thereby, EPF IUT funds are available for them. Very good. Right. So today we looked at capital adequacy at the beginning, but I'll give you more lengthy reading materials and we'll fully complete next week on capital adequacy area. Today, last week I started to check on past papers and today we continued the second part. Now last week I selected only question number 1 and showed you how the simple questions are asked, and today we showed you one selected topic, unit trusts, how the examiner is asking questions and how certain questions were repeated and certain were added. That's how the examiner is preparing questions. Then we took another question that was not repeated. Okay, so when you are preparing for your exam, okay, now I'm talking about preparing yourself for the exam. It's like technical analysis. You look at the past pattern, then you predict this is how it may happen. Okay, so this is how we were analyzing shares in technical analysis. I showed you some charts. If it's going up or if it's going down, bubbles, burst, means what? We are trying to predict looking at past patterns. Okay, these main areas are often tested. So what are they? Insurance, unit trusts, then payment systems, okay, primary dealers. These 4 areas often tested. Then venture capital tested from time to time. Then superannuation only once tested. So when you are preparing for the exam, from one side you may use technical analysis. These are the mostly tested areas, therefore there is a very high probability of testing the same areas. That's number 1. Number 2, fundamental, right? That's how we analyze shares. You have a syllabus and the entire syllabus must be completed, then only you become a very good banker. So you must know about venture capital, your competitors, okay, leasing, then factoring, margin trading, the products, from debit cards, credit cards, okay, payment mechanisms, right? Then you must know about pawning, hire purchasing, that area. Then some directions of the central bank. You should know about corporate governance, directions on related party transactions, directions on interest rates, directions on capital adequacy, then the types of risk, market risk, corporate risk, okay, operational risks. So you should know about little bit on risk area. Then retirement or the pension schemes, why they are competing with other funds, then unit trusts, how they are competing with your fixed deposits, equity and the relationship with the fixed deposit interest rate. So we are covering fundamental entire syllabus. Okay. Now you're preparing for your exam. Then I showed you, irrespective of how much I teach you, some question, not everything, some question can be asked from the environment. Maybe I have never discussed that area in the classroom, but if it's related to the main topic, one or two such questions will be added. Okay, so I showed you the foreign investment in foreign investment in stocks. Okay, so why are they moving out? What is happening with the foreign funds? Right. Now, when I'm looking at your answers, I can see answers of only 3 individual students. And I'm extremely happy with the standard they are maintaining. That's really good. Now I'm worried about the other crowd. Okay? Whatever the reasons, you must try to answer. We all make mistakes. I said, even when I was 30 plus years old, the term chicken run was taken for granted. I did not use the dictionary or Google images to check the exact meaning. But when I was teaching my children, maybe when I was 36, when I'm reading some children's books, the term came chicken run again. Then I want to know the exact meaning before I teach. Now that's the beauty of teaching. When you want to teach, you will learn more. Then I came to know, okay, this is the exact meaning. Now the rest of the crowd who are not answering much. All right, now that's Nadini, if you can remember the direction, that's okay, but that is not expected, right? I'll touch upon some of these questions raised from corporate governance later. You need not to by heart the direction, say direction number 3 of 2011. Likewise, you need not to by heart. When it comes to acts, there are very few acts we are discussing, so you can name the act. Directions, you must get the meaning of the direction. Let's say corporate governance. The questions were asked on having a senior director. So you need not to say this relevant to this perfect, this direction number. No, you can just describe it. Okay. So you need not to by heart the numbers of these directions. Right. Okay. Now, I have given you some reading materials, but these subjects are improving day by day. Let's say we don't have Exim Bank. Okay, so there are no Exim banks so far in Sri Lanka. So what is Exim Bank? Export Import Bank, right? So if an Exim Bank will be incorporated after passing an act in the parliament, then we may talk about new products, rediscounting. What is that? Means what? Our subject is an evolving subject. It is not a subject that everything has grown up. No, it's in evolutionary stage. So we may come across with different terms and names. Now these days, you must look at moratorium. What is moratorium? Why it is given, right? Now, with the previous government, we came with the nice term LTV. Then there were questions raised from LTV. What is LTV? Why it is imposed? Okay. Now this time we are coming across with moratorium. Okay. So just look into, read some articles on moratorium. Read a little bit on what was happening in the banking sector during COVID-19 in other countries. What were the activities taken by the governments in order to help the general public suffering suffering economically during COVID-19. Okay? So take your time and read a little bit outside. Okay. Exam will be focusing on a subject and a syllabus. While doing that, certain very few questions will be taken from the areas talked recently. Okay? So you must get an understanding on such things. Now, one purpose of learning is passing exams. The other is changing your behavior. A learned person will behave differently than unlearned person. Right. So we talked about stocks, we talked about investments, we talked about unit trusts. How many of you have invested in unit trusts? Okay, so in a physical classroom, when I say you can raise your hands, and when you are not raising hands, I can see your response. Yeah, I cannot see, but I believe none of you have unit trust accounts. Okay, now today we said even with 1,000 rupees you can diversify. Means what? Even with a very small amount you can start up a unit trust account. So why don't you do it? Okay. So one purpose is passing exam, the other purpose is changing your behavior. But one different finding is in stock market, most of the people who are excellent in investing are not from proper educational background, surprisingly. Okay, so this is one drawback of our education system. Our education is like a sacred cow. We want to worship the qualification, not to use or utilize the knowledge. Okay? So I'm asking you to refer a little bit of notes outside, read a little bit about moratorium, what is that, find what are the benefits given to foreigners who are going to invest in unit trusts. Okay? Find these things. Continuously improve your knowledge. Okay, for the exam purpose, now we can see it's not difficult, right? You can get a pattern. Certain questions are often repeated, and you can see that your standard is perfectly okay for the exam. I'm referring to those who send me the answers. For the rest of the people, you can see the chat box, how many useful discussions were taking place in the chat box. Go to it, try to write your answer yourself and check the answers given by 2-3 good answer writers of this classroom. With that, I'll end today's session. Next week, I'll send you capital adequacy related more notes. Then we'll have a lengthy discussion on capital adequacy. After that, I'll do cooperative societies. After completing that, once again, I'll move into exam questions and answers. Thank you. With that, I'll end today's session.